Hello and welcome to Nation on Fast Track, where we decode complex policy and tech challenges shaping India's future. Now, let me hit you with a hard truth. India has over 60 million MSMEs and millions of aspiring consumers, but most still can't get a simple loan. Not because they're not worthy, but because the system isn't built for them. To help us break this down, we have someone truly special, Srivastava, former Deputy Director of UIDAI and the man who literally helped build the backbone of India's digital identity infrastructure, the Aadhaar data center. An ex-bureaucrat, a tech strategist, and a fierce advocate for inclusive systems. Please welcome Mr. Srivastava.
Thank you.
Samir, let's start at the top. India has UPI, Aadhaar, Jan Dhan, and still, people and small businesses are struggling to get loans. Why is this gap so persistent?
Because the lending system was designed for yesterday's India, not today. It works great for people with jobs, salaries, and property. But for gig workers, small traders, or farmers, there's no formal paperwork, no collateral, no credit history. So even if they are earning, even if they are responsible, the system does not recognize them at all.
But aren't we sitting on a mountain of digital data? Why isn't that helping lenders assess these borrowers?
That's the irony. We have the data, but it's fragmented. Banks have some, fintechs have some, GSTN, UIDAI, telecom companies, everyone has a piece. But the data does not flow easily across the systems. And when it does, it's expensive or slow. Account aggregators are fixing this, but we need scale, trust, and interoperability to make it work across the board.
What about small loans? Rupees 5,000 or rupees 10,000? Why are they still difficult to get in a country with over 100 crore Aadhaar numbers?
Simply because traditional lending is expensive at the back end. Approving a small loan often costs as much as a big one. So banks prefer 5 lakh over 5,000. It's just a better ROI. But that leaves millions of Indians without access to timely emergency credit. We need fully digital, automated, social lending models to serve this base.
And how do we measure creditworthiness without a CIBIL score?
By use of alternative data. If someone regularly pays mobile bills, recharges, gets paid through platforms, or uses UPI, that's credit behavior. With AI, we can assess intent and capability far better than old school credit scores. But the ecosystem needs to evolve to accept and trust these new indicators.
Okay, if you were to list 3 bold moves to fix this credit gap, what would they be?
Okay. Number 1, unlock frictionless data flow via account aggregators with robust user consent. Number 2, design flexible credit products for people with irregular income, like gig workers, farmers, small vendors. And number 3, build partnership between banks, NBFCs, and fintechs backed by the partial risk guarantees. This isn't about finance, it's about economic justice to all.
Brilliantly put, Samir. Access to credit isn't charity, it's opportunity. And as you've shown us today, we don't lack technology. We need systems designed for the real India. Thank you for your clarity, candor, and for being a bridge between governance and innovation.
Thanks for having me here.
Thanks for watching, viewers. We shall soon be back with yet another episode of Nation on Fast Track.